Hi friends, hope your exams went really well. I am recording a video to provide the suggested answers as well as my review about your costing paper. Though this video is recorded before your exam completion, it will reach you only after we complete the paper. This I keep saying students that during your exam days, don't discuss paper. If you discuss paper, it will unnecessarily demotivate you in case paper goes bad. Now coming to the costing paper, a standard and a relatively easy paper. Looking at the various papers which have come in the past, if I look at this paper, it was relatively easier side. There were new adjustments obviously added in the questions, but more or less, it is covered in the question bank which we have given, or the ICAI study material if you see, and also my concept book. So coverage wise, it was a comfortable paper. There were extra add-ons done in question 1 to 5, which is on cost sheet. There were some add-ons done on 1A, 1C, 2A, some add-on, but otherwise pretty much a straightforward, simple paper. Now, every subject I have been doing something called as a block method of preparation. So if you look at the block method of preparation, in the preparation, I have classified it into four blocks. I have classified into four blocks, and you look at this is what has happened. We had a block one which was on marginal costing, ABC and cost sheet. I expected that we will get 31 marks. Good, 39 marks came in exam. Budgetary control, service costing, material cost and labor chapter. These seven chapters I had covered in my revision classes which I had conducted and I had uploaded in YouTube also. 76 marks came from these two areas, and many students who have done my classes, that revision classes, or watched the video, they said they found the paper extremely easy and they were able to do really well in paper. Theory areas I anticipated 10 marks, but it came for 18 marks. The last question, there was an internal choice, technically 14 marks. And the last block, where I normally tell to give less importance, came for 24 marks in exam. Around 90 marks out of the 118 were covered in the top 160 material which I had released, along with the concept book and the summary theory. If a student had just focused on top 160 material, concept book and the summary theory, they would have comfortably answered the paper. And I have been telling you that summary theory is very critical. You look at this theory, question 1 is covered in concept book, question 2 is covered in summary theory, question 3 is covered in summary theory, question 4 was not covered, but there was an internal choice. So you can easily answer the theory question if you just focus on those 10 pages. This is a broad review. Paper is on the easier side, easily scoring paper. Now I'll get to specific questions one by one. We will discuss it. Quick discussion. Question 1 was on the cost sheet, predominantly classification oriented question, where there was a royalty paid. This will be taken as direct expense. Power and fuel, this can be assumption based, and my answer can change if you change the assumption. I think I say will take direct expense. Selling and distribution overhead, repairs and maintenance for plant and machineries, factory overhead, sales offices, selling overhead, plant and machineries, again factory overhead, research and development, separate line item, depreciation on offices, admin overhead, general manager is admin overhead, sales and marketing, selling overhead, credit for recoveries are scrap, deduct, separate line item, opening stock, separate line items, closing stock, and there were two question mark. Raw material purchased, part of direct material, freight inward, part of direct material, wages to factory workers is 30% of raw material consumed. So whatever is the raw material consumed, outer column figure, 30% of that, 30% of that is going to be wages. Okay, 30% will be wages. Closing stock is, so closing minus opening is equal to 990, and closing plus opening by 2 is 1155. This will give you the closing stock figure, and based on that the cost sheet will get completed. Power and fuel has been taken as a direct expense. Answer can change if the same is taken as factory overhead, and I cannot say we'll go assumption based here. So that question alone could be a little bit of a luck factor. I feel that alone is a little bit of a luck factor, but otherwise the question was straightforward. Question 2 was on our marginal costing. First thing we usually have to do is calculate variable cost per unit and total fixed cost. So this will be variable, variable. Next is fixed, again variable, fixed, variable, fixed. So first thing you'll have to do is compute VC per unit and total fixed cost, which after you calculate break even sales in rupees is equal to fixed cost divided by PV ratio, or fixed cost divided by contribution per unit, and then multiply with the selling price. Selling price given in the question is 75. VC per unit, when we calculate, we get 57 per unit. VC per unit is 57. So PVR you calculate, then you calculate break even point, or you calculate break even point in units and then multiply with selling price. Second point was what will be the profit? 10% less. 10% less means units going down, not price going down. So from 36,000, we will make it 32,400. Multiply that with contribution per unit and deduct the fixed cost, which is 468. Deduct the fixed cost. Third part, I don't know why they added this term called as per absorption costing, unnecessary to confuse student. What is cost of production? Cost of production is till this item. This is cost of production: 950, 593, 285, 190. No opening, closing stock and all is not there. So you just need to add up these four items. That will give you the cost of production, and total cost is adding all the item. Total variable cost in that note 1 we calculated, and contribution per unit is computed. I think this, according to me, was the easiest of the lot. A 10-mark question, easily scoring one. Coming to 11, this is on process costing. A product passes through process 1 and process 2. Material issued to process 1 160, wages 70, so 230, manufacturing overheads 58, 288. Anticipated normal loss is 6%. So I will have to add up all expenses, which is 288, deduct sale value of normal loss. What is sale value of normal losses? 10,000 into 6%, 600 into 10 divided by 10,000 minus normal loss. Normal loss has to be deducted in numerator as well as denominator. You will get rate per unit, and we are transferring 9,200 units. So 9,200 into this rate per unit. This question was on under or over absorption calculation, again covered in our material. PNP Limited manufactures a single product, absorb the overheads at a predetermined rate of 20 per machine hour. At the end of financial year, it is found that actual production overhead is 12 lakh. But from this 12 lakh, I have to remove the abnormal item. 80,000 obsolete, 30,000 wages. So net amount is 10 lakh 90,000. Net amount is 10 lakh 90,000. 50,000 hours were worked. So overhead absorbed is 50,000 into 20, 10 lakh. Under absorption 90,000. I'm not giving detailed explanation at all because you've written exam. You will obviously know all this. Under absorption 90,000. In this, what will go to cost of sales is 90,000 divided by 20,000 is called supplementary recovery rate, and multiply that with 18,000 units. Multiply that with 18,000 units. 81,000 will go to cost of sales account. Unit sold part will go to cost of sales account. Again, a fairly simple question. We move to the next question. I think this was a very simple question if concept clarity is there. Material cost variance is given, which is nothing but MCV is equal to MUV plus MPV, material usage variance plus material price variance. This will give me price variance, and usage is equal to yield plus mix variance. That will give you the mix variance. So they have asked for material price variance and material mix variance. Again, a straightforward question. Question 14 was on an area called contribution margin method, which a student would have answered if they are aware of the method. This may have become challenge for few students if they had not focused on this chapter. They have given cost data. Under this method, the variable cost 1,20,000 material and labor will be split to the two products in the ratio of number of units 200 is to 400. So my sales is 70,000 and 1 lakh, split in the ratio of 1 is to 2, which is 200 units of X and 400 units of Y. 1 is to 2, 40,000, 80,000. Leftover number is contribution, and in the ratio of contribution, we will split the fixed cost. We'll split the fixed cost 3 is to 2. Question 15. It was on an area called inventory turnover ratio. One good thing they did here is they gave raw material consumed here. Normally they'll give raw material purchased and you calculate consumed. So here inventory turnover ratio is raw material consumed as it is divided by the average inventory 15 times and 360 divided by 15. Some student would have calculated raw material consumed because normally opening stock plus purchase minus closing stock is given. But here they gave consumed directly. So in an exam hurry, if you have missed this, it could have led to an error. 24 days. With this, the MCQ part got over, and now I'll move to the descriptive discussion. MCQ were very simple. Ideally, you should score 20 plus in the MCQ segment. You can comment here how many marks you are going to score, and if there are any doubts also you comment on the video. I'll now move to the descriptive part. Question 1A, from marginal costing. I felt this to be a very good question and test understanding of the students in case they do not have grip on concept. And again, a question on an area called variable versus fixed. I used to spend so much time on that. I'm very happy to see this. If you see direct material, when you divide, you get the same number. So it's a variable cost, wages, variable cost, factory overhead. You'll have to split change in cost by change in units. I'm not discussing the entire question. I'll only do a quick discussion. Change in cost by change in units. Once you do that, you will get total variable cost per unit and total fixed cost. In that, material cost will go up by 10%, wages will go up by 15%, and fixed overhead will go down by 20%. Three changes are there. 10% increase for material, 15% increase for wages, and fixed factory overhead will reduce by 20%. So if you divide 15 lakh by 3000, I think you will get 500, increase it by 10%, then 200, increase it by 15%, and change in cost by change in units. So contribution is X minus 880 because we have to fix the selling price. And fixed overheads was earlier 50,000, go down by 20%, and profit is 11% of sales. With that, my selling price came out to be 1000 per unit. Very good problem. If grip on concepts are there, student would have answered. Again, very happy with the quality of drafting by ICAI in this question. Next, question 1B. We have covered this in our top 160 material. Here, they have not given normal rate of wages. You can assume that to be A, and they have not given material cost. You can assume that to be B, and will be forming two equation. How will we form two equation? For example, for Ajoy, it will be material cost is B or A, that is your wish, okay, plus labor cost is 32 into the rate per hour, 50% of time saved. What is 50% of time saved? 50% of 8 hours. 40 hours is the time given, 32 is the time taken, plus 4A. B plus 32A plus 4A, 360 into 32 is equal to 124 800. This is for the first first person, which is Ajoy, and for Bijoy it is going to be B plus 30A, 80 by ST, 30 by 40 into 10 into A plus 360 into 30 equal to 124800. Solve this and you'll get the answer to normal rate of wages and material cost. Straightforward simple question covered in the top 160 material, and I also done it in the revision also. Next, question 1C. This was on variable overhead as well as fixed overhead, predominantly variable overhead. Fixed overhead testing was not much, predominantly a variable overhead question. Here they gave standard variable overhead rate 3 per hour. One unit will take 5 hours. So 15 per unit. We used to have a format SR into AO, 15 into 15 560, SR into AH, 3 into question mark, and AR into AHR, AVUH. They wanted actual hours to be calculated. This you can compute using the formula for your variable overhead efficiency variance. Variable overhead efficiency variance is equal to 15 into 15 560 minus 3 into AH is equal to 11 400. This will give you actual hours, which is 74,000. Then actual variable overhead rate per hour is AR into AH using variable overhead expenditure variance. What is expenditure variance formula? SR into AH minus AR into H, 3 into 74,000 minus AR into 74,000 is will give you the actual variable overhead rate per hour, which is 3.5. Variable overhead cost variance, one formula, other the very simple one is efficiency plus expenditure. Efficiency plus expenditure will give you this. Fixed overhead cost variance is SR into AO minus AFOH. SR is 2 per hour into 5 hours, 10 per unit. 10 into 15 560. 10 into 15 560 minus 185 minus 185. This will give you the answer to question 1C. These are your answers. You can check the answers, whatever you have done, if at all you want to compare. Then came question 2A, which was on a toll plaza. We did this question again in the revision batch, but along with this, they added extra adjustment. ICAI was smart enough to add extra adjustment. They said that every year, total of 60 lakh vehicles. This alone I'll discuss little in depth. So 5 lakh vehicle per month. In this 5 lakh vehicle, 3 lakh is passenger vehicle, 15% heavy commercial vehicle, which is 75,000, and rest are buses, which is 1,25,000. 60 lakh into 5 lakh into 60%, 5 lakh into 15%, 5 lakh into 25%. They have given various expenses. So this will be 3 into 10 into 30 into 800. That is the collection personnel. Supervisor 2 into 3 into 30 days, 1200. Security personnel 3 into 10 into 30 into 500. Toll plaza manager 2 into 1 into 30 into 2000. These are annual costs. So divide by 12, divide by 12, divide by 12. This is a separate line item. Depreciation and amortization is a apportionment of capital cost. Other insurance and safety. Interest will also come. Interest will also come in the operating costing, assuming it is relating to non-long-term funds is the assumption we took. This will be divided by 12 and we can write it as a separate line item. And all put together, I'll get my cost, which is 1 crore 88 lakh. All cost is 1 crore 88 lakh, and they want a total cost per month. I want a profit of 20% on collection, 20% on sales. So it will become 100 is sales, 20 is profit. 80 is cost. 80 is cost. So 80 equal to 1 crore 88 lakh. 20 equal to question mark, which is 47 lakh. Put together 2 crore 35 lakh. Now, we will assume that the toll rate for a passenger vehicle is A, heavy commercial vehicle is 5A, bus is 4A. A into the number of vehicles is mentioned here. 5 lakh into 60%. A into 3 lakh. 5A into 75,000 and 4A into 1,25,000, all put together. Passenger vehicle is 20 rupees, heavy commercial vehicle is 5 into 20, bus is 4 into 20. A straightforward question. That extra add-on fixation of rate part, they added an adjustment from the other question. Otherwise, very simple, straightforward. Question 2B, I became very happy to see this question. Finally, some question came from overhead chapter. Normally, overheads is tested very less. Here, we have two departments. You have to form two equation. So, S1 equation will be X is equal to 1,60,000 plus what it gets from Y. It gets 0.1. 0.1 Y. Y is equal to 2,40,000 plus what it gets from X, 0.2 X. Solve the equation and then do one distribution. So 187, 277 in one round of distribution. These will be the values. Where only distribution is asked. They did not ask for primary overhead distribution, only secondary overhead distribution. And where also cost is given directly for S1 and S2, nothing for P1, P2 and P3. So this was on question 2. Question 2, ideally any student should have attempted this. 14 marks solid you can get. 3A, again a question from our activity based costing chapter, and a very simple question because not even time consuming. They have given activity, total cost, cost driver name, CDQ, number of projects total is here 40. Consulting hours total 6,400 plus 5,600 plus 2,000 14,000. Number of client meeting total 90. Software development 22,000, and this will give you the CDR, cost driver rate. Once you get the cost driver rate, multiply with the individual CDQ. Multiply with the individual CDQ, cost driver quantity. Multiply with the individual CDQ. So 20, 250, I think 30. I'm not even using a calculator. That much simple this question was. 6,30,000 by 90 is around I think 7,000, and 1540 maybe I'll need a calculator here. But otherwise it was a very simple question. Then you multiply with the CDQs. After multiplication, you will get that no material cost, no labor cost. Divide by the number of projects. They wanted total cost and per project cost. And then a profit statement and find out based on profitability percentage. Percentage means net profit margin. Based on net profit margin, we have to decide which is better. So these are your cost per project. Highest profit margin is for education. So that is the most percentage, not absolute. Percentage wise, they wanted the one. Clear? So this is on activity based costing. I felt it was a very simple question, easy to score marks. TB came from an area called limiting factor. I don't know, I spent around 1 hour or 1.5 hours in the revision, and I was thinking that something should come from this area, and luckily it has come. And many students would have been happy seeing this question if they have attended those videos or seen those videos. Here, the limiting factor is raw material. So we'll have to calculate contribution per kg of raw material. 1,000 minus all of this 200, 150, 280, 370 is contribution per unit. 1,500 minus 920, 1,500, 500, 800, 920. So 580 divide by number of kgs. Number of kgs is 10 and 20. Number of kgs is 10 and 20. You will get 37 and 29. So priority is product A and then product B. I allocate, I get 5,000 and 3,000 and a statement of profitability where I get individual product wise profit and the overall profit. Very simple question. Many students would have been happy seeing this problem if they have done limiting factor analysis. Then comes question 4a. From the area of budgetary control, they added one extra good adjustment that was on the machine hours part. Let's quickly discuss this. First, they have given 4 quarter sales. Beginning of the year opening stock is 14,400 and end of the year I'll give my closing stock. With this I can do annual production. What is annual production? Is annual sales plus the closing stock minus the opening stock. And for every quarter, production pattern is 80% of the sales of the current quarter and 20% of the sales of the next quarter. 80% of current quarter, 20% of next quarter. So once you get, they wanted us to calculate, prepare a quarter wise production budget and a raw material consumption budget. Quarter wise production is 72,000 into 80%, 90,000 into 80%, 99,000 into 80%, 1,08,000 and 20% of next quarter, 20% of 19, 99, 108, and Q4 alone will be balancing figure which is computed from here. Overall is 369, sorry, overall is 384, balancing figure 115,800. Quarter 4 is 1. Based on this, they wanted raw material consumption. They have not asked for raw material purchase budget, only consumption is asked. So into the whatever is the input output ratio, 2 is to 1 into 2 is to 1. Then they have asked for something on machine hours required. Machine hours required is production 384 into 2, 768 and 384 into 3 into 2 1 into 3. And in this, there will be maintenance after use of 5,000 hours. This can be interpreted different ways. 7,68,000, I think I'll need a calculator. 7,68,000 divided by 5,000. After every 5,000, we use maintenance requirement is there. 768 divided by 5,000, 153.6 can be rounded up to 154, or if it's after every 5,000 means it will be only 153. 153 into 100 hours of maintenance, and other side 384 into 3 is 1152, and this is divided by 3,000. 384 times maintenance. So 768, 1152 divided by 5,000, 153, 384 into 100 into 100, and overall. Maintenance is needed after use, hence has been rounded off. Alternative assumptions are possible based on assumption. Why rounded off to 153? Because 154th one is not completed. That's the assumption I've taken. Alternate answers are possible. This alone. Next, journal entries. Material purchased on credit. If you purchase material, raw material control account debit to general ledger adjustment account, non-integrated. Issued to production, WIP control account debit to raw material control account. Wages allocated, WIP control account debit to wages control account. Factory overheads over absorbed. Over absorbed will go to credit side of P&L. So factory overhead control account debit to costing P&L, and under absorbed will go to debit side of P&L. I think I had shared some important areas for every chapter. Here I had said journal entries. They tested journal entries here. In your limiting, in your marginal costing, I had said limiting factor got tested. In the overheads chapter, I had said under or over absorption, that is also tested in exam. So many areas, the important ones got discussed. Some chapter, obviously, it was not discussed. It's not that I'm fully perfect and all. Question 5a could have been a bouncer for few questions if they were not aware of ABC analysis. ABC analysis is an area which could have been a challenge for few students because not tested for a very long time. So maybe student did not pay attention to this. First thing is we have to rank the material. Ranking the material is write the various material, whichever has the highest value, rank 1, rank 2, rank 3, rank 4, rank 5, rank 6, rank 7, rank 8, and then do an ABC classification where above 50,000 is category A, 15 to 50,000 is category B, and then category C. So category A, percentage of units, percentage of cost, 69% of value, 9% of quantity. 20% of quantity, 20% of value, and 9% of value, 70% of quantity. This is categorization of ABC. Highest value, lowest quantity. Highest value, lowest quantity, category A. Moderate quantity, moderate value, category B. Lowest value, highest quantity, category C. Question 5B, EOQ. They have said the company's annual production is 90,000 and each gadget requires one component for its assembly. So 2 into 90,000, only one component is needed, into 1,250 divided by 25. Divided by 25, this will give you EOQ. Number of orders is annual demand divided by quantity per order. Very, very simple question. And under or over absorption also got tested, but the journal entries got tested. If there is an under absorption, FG will be debited. Over absorption, credited. Under absorption, debited. Amount, supplementary recovery rate. Supplementary recovery rate into closing stock units into equivalent units of WIP into units sold. This got tested. And then 6A was a theory question, responsibility center. We have covered this even in the concept book. Four types of responsibility center are there: cost center, revenue center, profit center, and investment center. A student would have answered this even if you had not prepared for the theory. Others you cannot answer without preparing. Advantages of job costing from the summary material there. Important factors again there in summary material. 6D was not fully covered in the summary material. That was not covered in the summary material fully. There in the main material. It's there in the main material, but summary material it's not covered. I'm very happy with the paper. I hope you guys are getting an exemption. If you have any doubts on this, do comment it and let me know any challenges you faced. I'll also be giving you an FM video. I think FM paper will get over. After that, maybe I take a day's time and then give you the FM video. Costing I've already recorded and it will be uploaded after your all exams. Thank you guys.